But let's now put together a bit of the information we've seen so far to know how to start building a narrative, expectations, understanding the market movement, and what I could expect in the next moves, next minutes of price action, depending on what's happening or where I'm located on the chart. And as we continue to assimilate all this information we've seen in the first videos and be able to move on to the last part, which is order flow, and it's what usually takes more time to internalize all that information, and not just time but also screen time. We need that. We need experience. It's not just that I tell you the information and that's it, and you know everything. No. To truly understand the final point of all this, which is order flow, we need to seriously apply this and start seeing it both in backtesting and testing it live. I mean live account, but I mean live price action. Keep reviewing how everything happens, how structures are being formed, how the different zones are working. One learns that until the moment they start applying the information they are acquiring. I want you to go through what happened to me in the past with ICT, that there came a point when I focused more on finding videos and new videos and liquid information about their mounts, their mentoring, and as many documents as I could read. And I was forgetting the most important part, which was to go apply it and thus gain that experience. The real learning begins when you put into practice what you are seeing. Well then, going back to everything about us, we are clear that the price makes pullbacks or retracements for two main reasons. Mainly because a high or low is taken out, or because it gets to, you tap on an area, an S&D, an offer and demand area. These are the reasons why the price makes pullbacks or retracements. Why? If we see it again as positioning, if this movement to the downside happens here, I would expect there to be a stop loss and also buy orders. Buy stop orders for those who trade breakouts. So there's a lot of liquidity here. Liquidity is simply an efficient market, a market that provides counterpart at different asset prices. So knowing that there is liquidity, the more liquidity a market has, the more participants it has, the more orders it has. So there's quite a lot of liquidity here because we know it's a point where something significant happened, and where participants protect themselves the most is above that something. It is their resistance point for those who see it as support or resistance. It is the main point where those orders will be. The area of supply and demand, as I explained in the previous class, is a point where there was movement in one direction. There was enough and more counterparty. So I know that there will be a lot of liquidity. There will be a clash of interests. So keep this in mind, that a pullback can happen as a result of its push Not necessarily a pullback, but also consolidation. So, what expectation can I have if I am building a higher time frame structure? At the moment it is taken out. So the price becomes a structure, and the moment I break a high, I can expect the price to then create a range. That is the first expectation. Nothing I've mentioned here is 100% guaranteed, and I don't want you to start thinking about it mechanically. I insist on that a lot. The market has its different contexts and everything, but the idea is that we understand all of those contexts and know the right moment to get involved, because many times price is when it is ready for a strong distribution, whether because of earnings of some stock, like what happens with Nvidia, some important news, an unofficial announcement, the war theme. All those kinds of things ignore this a lot because the market is all in agreement that there is a clear direction for fundamental reasons. So it's important that we stay alert to those kinds of things as well. So my first expectation when a high is taken out is that the price consolidates and that there is eventually a pullback to the previous range. Now, how can I align this to have a higher probability that this happens? If at the moment of taking out this high, it turns out that around here there was an area of supply and demand, then those where we work to, then these two things are in our favor in this case, so that a consolidation is achieved and a pullback starts, the taking out of a high where there was liquidity, where there were orders, where there is a conflict of interest and the tap to a previous area of supply and demand around here. Tap to an area that was further back. Then we can have this market expectation. Well, now, how do I build a narrative in a live market? Then it's obviously going to be necessary to apply quite a lot of things: multi-temporality, market profiles, function compliance, etc., etc., etc. First, why do I want multi-temporality again? As we were talking now, if I'm making structures with shorter time frames over here, I don't want to assume that a small change in the structure will already mean a change in the longer time frame, right? So let's review a bit from up there what we might have. You see this in a minute, how it looks, and see, for example, how here an internal low is formed with body, and then this comes and forms this height over here, and notice even a small close with body above this. Many might directly consider this a change of structure upwards, so they will immediately consider this area, and they will want to look for longs on the retracement. But I want to understand, well, what is further back and what might be forming. So I start to study the market from what we have here, from what has been building, why the price made this move, and I start to see here a quite noticeable change in structure, that the price had upwards, and we start to align things. So at the last moment, it rises to 50%. Watch how everything starts to happen, just as we mentioned in the system functions. And we have the first touch at 30%. Well, we have a first touch at 30%. That touch gives us the continuation. Then the price comes again to make a pullback to this origin and gives the double bottom. Double bottom has not yet swept the first touch. However, it made this upward distribution. Now see where that consolidated range starts, when there's a conflict of interest. So what did we have? In 1 minute, the structural change upwards. That upward structural change reached where? Where the downward structural change was at all-time highs. These are all-time highs in the Nasdaq currently. So if the price has already reached there in the higher time frame, this, to me, will have more weight than this 1 minute thing, because this won't be a structural change, not in an hour nor 15 minutes. In a minute it is. But here, what I'm going to take as priority is this. But then see how the price starts to be clear, because the fight between those two things begins. So now it's given that the sweep to the first, to this area, it touches 50%, and that comes and takes all of this out, see? That comes and takes all of this out. And the last low we picked up here was this one. So this will be an area of another temporality. When we took this out, and the price came to surpass this to touch that 30% and make this continuation. Now, what do I want? Where am I going with what is happening here in terms of narrative? Let's start gathering the topic of fulfilling the function. What is fulfilling its function in this scenario? It is fulfilling its function, you'll see. Because what was the last one? What was done before we started to move up through here? This one here. So, on a 1 minute structure, the price was doing this bearish move. It changed to upward without getting too much into intermediate candles. Let's look at it in a macro way. When we close with the body below this here, it then makes a pullback to the previous area, and that continuation happens. So if I already had a double bottom upward move, and I am building on the higher time frame too, well, here there was a tap, but it was super on the edge. I don't usually consider this a tap. I like when a tap is around 30%, but let's say here is the tap, and eventually the double top was formed. But I see that this is also forming in the higher time frame, and I see that the bullish move, look how here is the tab, from this structural change here, the double bottom. And this was theoretically supposed to take out this high to make the strong distribution, but it didn't. On the contrary, it took out this low, and, in turn, the area from which that was being generated. I assume then that the overish is doing its job, and the bullish is failing as a result. The narrative is being varies. The price is giving me an order flow bearish, and then in the higher time frame, I'm going to have a structure change again. So over here, the higher time frame made a bullish structure change simply to come up to here, and it was doing this over here. Higher highs, higher lows, until this last protected one is taken out. And now the bearish order flow starts. What happened here is what I mentioned in one of the first videos, that we're going to understand with order why this happens. And it is a way to identify false structural changes. So this is how a narrative is constructed, by putting everything together. When something starts to fail in fulfilling its function, and conversely in the other direction, if it is being fulfilled, when I have things left unmitigated around here, it is also a way to understand that the price has reasons to go in that direction. Then if order flow and function fulfillment are being confirmed in that direction, and I am getting a pullback to that area, and this that I have unmitigated around here, be it an area, an imbalance, or whatever, a structure change from another time frame, if that is there and kept unmitigated before this pullback, then I can consider doing shorts to mitigate that. Something that's around here that kept me waiting all this for the price to give me that narrative and all that. Yes, but it's for us to understand how the price does its things. Well then, this video is about implementing part of what we've covered so far. Honestly, I want you to see how to implement all this in my market reviews, where you'll find some amazing information. But first, it's necessary to fully understand all the concepts. So, this is a brief video to help you get that understanding. What expectations to have depending on what the price is doing. If it makes a high, my expectation is for the price to consolidate a bit and return to the range. And that's when it creates the new narrative for me. When there are conflicts from an origin with an order flow, I wait for these kinds of things until one of the two fulfills its function. It gives them the narrative and context as well, and from there, it's simply about starting to follow the structure until a target. We abandon this logo here then. And this is its structure again. We abandon this low, and this is its structure again. Remember to take out 30% as well when the market is very trending, and we act with that. Then this break of the previous pullback area, 30% breaks that low, then we go to another area, and so on. So be aware that in the lower time frame, something is being built from the higher time frame. Know that when the price breaks a low, eventually, from some area, consolidation has to be generated to return to the range. If the range is reached and a level, an origin, a responsible is touched again, I expect some consolidation and the setup to start forming, and this way, all the time you take out the low, some consolidation in the lower time frame, return, and this way all the time. Until they start meeting, as I say, longer term goals. Well, in the next classes, the idea is to cover order flow, and with this, you can have access to market reviews and not feel so lost with all the information. The idea is to provide you with the basics, give you the concepts, and later combine everything, both in market reviews and in live sessions that I will be doing soon.